Hello and welcome. I am Ted Butler, the voice of Reverse Mortgage, your host today. I want to thank you so much for joining us, whether you found us through an invitation or an email. Uh, this is a new format for us, and I appreciate you taking the time to participate. I am going to be sharing our screen now. And now you should be looking at the first slide of our presentation today and a teeny little picture of me. And I'm going to start by saying thank you so much for investing time with us today. And I truly look at it as an investment. You are going to get out what you put into this. And we're going to be talking about facts today. No spin zone, no opinion, just straightforward facts, something that you can use to base your decision on. And we're going to also talk a little bit about health and safety and financial security. I wish I could hear you. With this format, it's a little bit different. If you've ever been to one of my seminars, I usually teach in front of groups of dozens of people, and I really love that personal interaction. But today, in today's world, it's going to be a little bit different. For health's sake, I'm going to be here and you're going to be on the other side of my computer. Now, you're going to be able to see me, but I'm not going to be able to see you. It doesn't matter if you're in your pajamas right now or your Sunday best. You haven't had to get dressed up to come to this seminar. And I truly hope that you and your loved ones are healthy and well. We are absolutely living through extraordinary times. Times that none of us anticipated, and certainly not our financial planners. If you have had assistance in setting up your life financially, this basically just knocks the blocks out from underneath it. Nobody had anticipated that we'd have 20 million people out of business, that we would have a complete shutdown of our economy for months. And we're not even through this yet. Who knows what the other side is going to look like? But hopefully we're going to give you some information to help insulate yourself financially from the world around us. And again, our goal is to give you the facts so you can make an educated decision as to whether or not this is a program that might be a fit for you, and provided to you in the comfort and safety of your own home. Housekeeping for today. Well, this is usually where I ask you to please silence your cell phones, but you're where you are and I'm where I am, and nobody's going to hear if your cell phone goes off. So you can put it on silent or whatever you want. And do know this, that if you need to take a break, you just hit pause. If you want me to repeat something, you don't have to raise your hand. Just push the backup button and I will say what I said as many times as you need. And the great thing is you can come back and listen to me again and again and again if your heart so desires. I'm going to ask you to please have a pad and a pen, because there are going to be points where I'm going to ask you to write something down, or you're going to think of something that you want to write down. And I'll give you an option at the end for questions and answers. And we may, depending on the format of this seminar, have a question box or a chat box that you can type questions in. If not, I will tell you this: if you email me or give me a call, I'll be happy to answer any of your questions personally. And we'll talk more about that at the end. And I'm going to send you a questionnaire because your feedback is vitally important. I want to know how you found today's presentation, and any suggestions that you might give me, I will certainly appreciate. I happen to be blessed to work for a company unlike any other company in the reverse mortgage industry, and that is Mutual of Omaha. Most of you are familiar with who we are. If not, a bit of our history: we have been in business for 110 years. We are a mutual company, meaning that we're not owned by stockholders, we're owned by our policy holders. And we have a different way of doing our business. And you can see by looking at our values and our mission statement and our vision, the sincerity and the integrity that we have brought to all facets of our business. And I'm delighted that that includes reverse mortgage. Who am I? Oh my gosh. Well, they call me the voice of reverse mortgage, mainly because I talk a lot about the reverse mortgage. I love to share what I've learned. And I've been teaching people about reverse mortgages now for going on 18 years. I've been fortunate in my career, and I have joined lots of organizations to help learn about financial planning and financial advising and insurance and elder law and estate planning and real estate. And these are things that I've learned that I will bring back and share to you. I belong to the FPA, the organization for certified financial planners. I'm actually an accredited instructor for the FPA. I teach classes to certified financial planners about the reverse mortgage. I belong to NAFA, the National Association of Insurance and Financial Advisors, and have been fortunate enough to be a board member for them. I belong to a number of realtor organizations. And for those in the Seattle area, you may be familiar with Rajiv Nagayach, the esteemed elder law attorney, and his organization, Aging Options. I am a trained aging options provider and a big believer in having proper planning. And I've been on his radio show countless times, and I've had my own radio show, Affordable Aging. You may have heard, or you may have even seen me on our PBS television station when I was asked to be an expert panelist on the reverse mortgage. That being said, I love to learn, and I love to share what I've learned with others. I mentioned a moment ago how special Mutual of Omaha was as a company. How many of us remember our Sunday nights when we would finish with dinner and take our baths and put our pajamas on and run downstairs and plop ourselves in front of the television set? Do you remember this TV show, Mutual of Omaha's Wild Kingdom? I certainly do. Oh my gosh, it was such a great show. And it was groundbreaking. It was really the first reality TV show of its kind. But it was an amazing opportunity for Mutual of Omaha to share important life lessons through the animal kingdom. And well, it usually brings a smile to most people's faces. Like I said, I love to teach, and these are some of the people that I'm blessed to teach. When I'm not teaching financial professionals or homeowners about the reverse mortgage, I happen to be a national certified ski instructor, and these are some of my little students there. My inspiration comes from primarily my parents and my faith, and my two boys, Charlie and Woody. Long story. This was a Christmas picture that I tried to take with them last year. They've decided at this point in their lives that they're done doing the matching jacket Christmas picture idea. Some of you might be able to relate to that. And then professionally, I owe a debt of gratitude to this man. How many of you remember this incredible voice on the radio, Paul Harvey, and his tagline, "And now for the rest of the story"? And what Paul Harvey brought to broadcasting is so important because he reminded us about context. He reminded us that it wasn't just the snippet or the headline that was important. There was a story behind the story, and that was where you really learned about what it was that was going on. And God bless you, Paul Harvey. I have utilized what I learned from you in every facet of my business. But what's important today is you and what your wants are. What is it that hit you and said, I've got to learn about this program. I've got questions. I need to figure this out. What's going on in your life? I'd like you to take a moment and write down your top 3 goals right now. What are you looking to achieve, or what are you hoping to achieve? What is it that you would love to see something like the reverse mortgage possibly provide for you? You have some ideas. Write them down. It's really important to see in black and white what some of these look like. And we'll refer back to this a little bit later. But are you surprised to be here? Many folks are. What happened in your life? Most people never set out a few months or a few years ago thinking that, at some point I want to really sit down and watch Ted Butler talk about reverse mortgages. Yeah, that's usually not how it works. Um, but something quite possibly could have changed in your life. Was it financial? Was it health? Was it retirement? Uh, it could have been, sadly, the passing of a spouse, or maybe the joyful union, marriage, at a later point in life for you. Or are you, as we're finding many folks today, doing fine, but looking to see if you can make fine better? It's a lot of folks that we work with are in a good situation, and they just want to make things, pardon for the English teachers out there, gooder. But there was something that triggered your interest in this reverse mortgage. And it's important to realize what it is that you're looking to achieve. So today we're going to learn about the modern reverse mortgage in the terms of it being safe, smart, and sensible. And I'm going to ask you, can you comfortably right now incorporate the words safe or smart or sensible when you talk about reverse mortgage? I'm going to bet that many of you can't. And I will guarantee you by the time we're done with today's presentation, you will be able to think about the reverse mortgage in terms of safe, smart, and sensible. But before we begin, we're going to do a little exercise. No, I'm not going to have you stand up, but it's something that no matter whether I'm teaching financial professionals or realtors or homeowners, we need to practice something that I like to call open-mindedness. George Bernard Shaw said, "Those who cannot change their minds cannot change anything." And if you march to the beat of a different drummer, it was Frank Zappa who said that a mind is like a parachute. It doesn't work if it's not open. I meet many people from all walks of life who think that they already know the answers. I was one of those people. Oh my goodness. One of the wonderful things about getting older is that the older I've become, the more I've realized the less I know. Now, I will tell you, once upon a time, that wasn't the case. When I was a younger man, I really thought I was smart, and I really thought I knew almost everything about everything, literally, especially when it came to money and finance. And I still come across many people who have invested considerable time and education and effort and are pretty comfortable in what they know and what they think they know. But you're never going to learn unless you have the ability to let go of something that you once thought was truth and you replace it with more accurate information. Yes, sometimes it's brand new information, but many times it's just an evolution of how you think about things. So we're going to practice open-mindedness today. Please leave behind your misconceptions, leave behind what you think you know, and let's focus instead on the facts and see what happens. We're going to do a little view into what I call reverse mortgage fact versus fiction. And I'd like you right now to write down, why don't you tell me, write down 2 or 3 things that you know about the reverse mortgage, okay? That you're pretty darn confident that you've heard and that's the way it works. Go ahead and write them down. And it's going to be interesting because I tell you, like I said, I've been doing this for 18 years and it's amazingly consistent what people come back with as far as ideas and information. And information is really what it's all about and where we get that information. And we get it from all sorts of places, right? We get it from the TV and newspaper, but we get a lot of it from the people that we know, friends and family and coworkers and whatnot. And our information really is only as good or reliable as the source. And I like to remind people of a little exercise that most of us went through back in grade school. Do you remember this, where it was either called telephone or telegraph, and the teacher would have us stand up and line up around the edge of the classroom, and they would go over to the first person in line with a very concise sentence, 4 or 5 words, 6 words, and whisper that into that first person's ear, with the idea being that they in turn would whisper it to the person next to them, and so on and so forth. And it came around the room to that last person, and the teacher would go to that last person and hand them a piece of chalk, which they don't use anymore, and ask them to go up to the blackboard, which they don't use anymore, and probably have them write out in cursive also that they don't use anymore, that short sentence. And I can see some of you smiling and nodding your head right now. What happened to that concise piece of information? You're right. By the time it passed through a few different people sharing, it changed. And the reason I bring this up is that it doesn't matter how well intended we are not computers, we don't remember perfectly. And then heaven forbid there is a disruptor in the class or a disruptor in the marketplace. Somebody, for whatever reason, whether it's for humor or maliciousness, decide to change that story just a little bit. It happens, and it happens every day. Anyway, so I'm just sharing that story to remind us that some of the things that we believe we know may not be founded in concrete. So let's just see how this list of reverse mortgage myths compare to some of the things that you may have written down on your piece of paper. Tell me if any of these sound familiar. Very common that we hear people say that, well, with a reverse mortgage, you sign your house away, either to the bank or the government. Okay, hear that very often. Other people say, oh my gosh, it's expensive. It's a very interesting term, expensive. It's relative, number one. We'll get into that in a moment. We hear that there's nothing left at the end, that it just gobbles up all of the equity. Or again, that somehow the bank or the government is destined to get the home. We hear that it's only for the destitute, the people that have no other option, and that somehow you could outlive your reverse mortgage. These are all things that I hear on a daily basis. I hear them from consumers. I hear them from the children of consumers. I hear them from trained financial professionals. And these are ideas that I had in my mind 19 years ago before I took the time to get the facts. Here are some facts, and you may want to start to write some of this down. Number one, you retain title to your home. That's right, full rights and responsibilities, but you retain title to your house. You can sell it at any point. You can pay it off. There's never a prepayment with the reverse mortgage, and when you pass away, the house goes to your heirs. It doesn't go to the bank or the government. If you have a mortgage on your home today, it's the exact same. All we are is a mortgage. You retain title. The lender will have a lien against your property for the amount that you owe, but it's your home. You decide what you want to do with it. Now, as far as being expensive, I tell people all the time that is such an arbitrary word, and it depends. What are you comparing it to? The reverse mortgage, number one, is a unique program. There is no other mortgage that works the way the reverse mortgage does. And oh, by the way, the most commonly used mortgage in America today is a standard FHA mortgage. Our cost is almost exactly the same as the standard FHA mortgage. Isn't that interesting? You don't hear people going around complaining about how expensive FHA mortgages are. No, but for some reason, we get kind of slung with some mud. Nothing left at the end is another one of those myths. HUD created the program with the idea that it's not there to strip out all of your equity. It's there to give you a safe cap of equity that if you decide you have to sell your house or want to sell your house and move in 2 or 3 years, it hasn't taken all the equity out of your house. Very important for you to know that. And in many instances, most actually, there'll be as much, if not more, equity in your home 10, 15, 20 years down the road than the day you started with your reverse mortgage. The bank or government, like I said, doesn't get the home. At the end, it's either going to go to whom you've decided in your will or trust, or the state is going to determine who's going to get your home. Here's a little side note. If you want to start World War III when you pass away, leave your kids without any direction. That's right. Die without a will or trust and see what, well, you won't see what happens, but I'll tell you, you may have seen what has happened with other folks. And I have witnessed this, sadly, too many times. You put a big pile of money on the table in front of, I don't care how nice a group of kids, there's going to be a trouble. Take the time. If you do not have a will or trust today, please get one done in the next little while. Here's one thing I will guarantee you, none of us are getting out of this alive. So you're going to need this. Your kids are going to need this. Please get a will or trust. Good orderly direction. Give somebody an idea of what you want to have happen to the house. That's what is going to be followed upon your passing. If you want your kids to get the house, great, your kids will get the house. If you want your church or your favorite charity to get your house, fine. Make sure it's noted in your will or trust, and it will happen. That it's only for the needy. I was told this by my boss when I was a financial advisor. Oh, none of our clients would ever need anything like this because we took such good care of them financially. I do reverse mortgages every month for multimillionaires, people of substantial worth and financial acumen. They love how this program works. It certainly isn't just for those that need it. The majority of people today use it because they want to. And you cannot outlive your reverse mortgage. It's almost a true statement. Please write down this number, 150, and you may want to circle it because that is the age at which HUD is going to call your reverse mortgage due. That's right. Sometime during your 149th year, HUD is going to send you a birthday card saying, just to let you know, your next birthday, your reverse mortgage will be finished. Please get ready to pay us back. And it's awfully nice to know that that you can't outlive your reverse mortgage. And we only joke about this. Do you remember Willard Scott and how he used to do the birthday greetings to those people turning 100? It used to be a big deal. It's not a big deal anymore. National Geographic had a cover a couple of years ago saying that this baby born today could live to be 120. And of course, Time, not to be outdone, said, oh no, our baby can live to be 142. Kind of an arbitrary number, but you get the idea. We are living longer, and 100 isn't that big of a deal anymore. I did a reverse mortgage for a young lady about 3 months ago. And when she came to my office, the first thing she told me was that she still had her driver's license. She was very sweet. She didn't drive that day. Her son-in-law drove her, but she was very quick to let me know that she still had her driver's license and she could drive anytime she wanted. 100 years old, sharp as a tack, loved what the reverse mortgage was going to allow her to do. But the reverse mortgage started at a certain point in time. And the first reverse mortgage recorded in the United States happened way back in 1961 in a little town called Portland, Maine. Has anybody ever been to Portland, Maine? It is a lovely town. Pretty as a postcard. They call it the lighthouse capital of the United States. But a very sad situation had happened. A woman walks into her local bank in tears because with the recent passing of her husband, she could no longer afford the modest mortgage payment that they had on their home. And whether it was divine or timing or providence or what have you, this is what happened. It just so happened that her husband had been the local high school football coach. So he was well known and well respected in the community. And it also just so happened that the gentleman who managed the savings and loan that held the mortgage for Nellie Young had played football for her husband and took exceptional pity on her situation and brought her into the conference room and sat her down and said, Nellie, we've got a dilemma. We can't forgive your mortgage, but we know that you want to stay in your home. And so this is what we've come up with. How about we allow you to continue to live in your home? We're not going to require you to make any payments on your mortgage until you're done living in the house. We still will charge you. So you're going to still pay us what you owe, but you're not going to have to pay us until you're done using the home. You sell the house, pay us what is owed at that point in time. What do you think Nellie Young thought? She absolutely thought that there was an angel looking out for her. And that was the very first reverse mortgage done in the United States. A true act of Christian charity. And it was marvelous. And more banks started doing reverse mortgages, but banks left to their own devices sometimes get a little bit more oriented to their benefit than to the consumer's benefit. And all of a sudden, reverse mortgages started appearing with this little bit of contract language, something that was called an equity share provision. And it meant that not only would the bank get the interest that was due to them, but oh no, the banks thought it would be a great idea that they received any growth in the home's value over time. And that really didn't work out too well for the people when they sold their house or the heirs, because it basically meant there was nothing left in the home. And it got to be so bad that in the mid 80s, AARP and a group of other senior rights organizations went to Washington and petitioned the federal government to put an end to what had become a predatory lending practice. And I just have to pause for a moment. One thing I try and share with my boys is how far we have come in this country. And for those of us on the call today, we remember civil rights. We remember the fights and the battles that were waged and won to give us the equality in law that we have today. We do not take it for granted. It was hard fought and hard won. And what followed shortly on the heels of civil rights was a movement for seniors' rights. Up until that point, seniors had very little voice, but they were growing in importance because our population was aging. And that was when groups like AARP were formed. And oh my goodness, were they tremendous advocates for seniors. And they were at the tip of the spear in helping the government put to end a bad lending practice. That was back in 1987. Now, for some folks, that was 100 years ago. But for others of us, gosh, 1987 just seems like yesterday, doesn't it? But 1987, Congress banned the old style reverse mortgage, but they realized that there was a real need to allow homeowners the opportunity to stay at home, have access to some of the investment that had been created in their home without being saddled with monthly mortgage payments. So they put together, based on actuarial science and social scientists, a program with all of the benefit and protection oriented squarely for the consumer. And they created a government version of the reverse mortgage called the Home Equity Conversion Mortgage Demonstration Act of 1987. And it was incredibly successful. So successful that in 1988, then President Ronald Reagan signed that bill into law. So what we have today is a mortgage program that is far more than a mortgage. And this is really what just literally blows people's minds. This is a federal law. The modern reverse mortgage is a federal law. The modern reverse mortgage technically is called the Home Equity Conversion Mortgage, or HECM. All right? Home Equity Conversion Mortgage. You may want to write that down, HECM. If you talk to a HUD counselor or a financial advisor, they may understand the term Home Equity Conversion Mortgage better than they do reverse mortgage. Interesting point. The Home Equity Conversion Mortgage is a reverse mortgage, but not all reverse mortgages are the government or HUD version of the reverse mortgage, the HECM. There are non-government versions of reverse mortgages. It's very interesting to realize that things like deferred property taxes are really nothing more than a reverse mortgage. You're going to pay those taxes when you're done using your home. Really interesting concept. But then there are versions of the reverse mortgage that aren't insured by the federal government, and those are usually jumbo reverse mortgages, and we'll talk about those in a little bit. Now, why did the government create this? Very important. They did this not to make money. We have a revenue neutral program. It doesn't cost money, it doesn't make money, but HUD put this in place because they realized that they were starting to run out of money. There weren't enough people coming into our systems for Medicare and Social Security, et cetera, to take care of the growing aging population. And so they realized that if they could find a way to help people take care of themselves The more they can take care of themselves, the less we as taxpayers have to take care of them. And it means that the people who really need the money are going to be able to have access to the money. The goal, to age in place where the vast majority of people want to, and where it's been proven that it's safer and more cost effective to receive care as you age, in home, not a facility. And all I'm going to say is the tragedy that we have seen with nursing homes and care facilities through the COVID-19 pandemic. Anything we can do to help keep you or a loved one out of one of those facilities, I'd say is a job well done. It gives you access to, for what many of us is our largest, and for some of us our only major asset, that's the home that we live in, without having to move or sell the house or take on monthly mortgage payments. The last thing you want to do in retirement is increase your monthly outflow. No, we want to save money, not spend more money. We want to have access to things that we have as investments so we can spend them down, so we can take care of the things that we need to take care of as we age. And this was created not by the banks, but created by HUD, the Department of Housing and Urban Development, like I said, using actuarial science and social experts to craft a version of a mortgage that was focused on the benefit of the homeowner, not focused on the benefit of the bank. Why? They want to help keep you independent, self-reliant, and self-sufficient. How many of you would rather spend the rest of your days managing your own life instead of somebody telling you it's time for Jell-O, and even worse, telling you what flavor Jell-O you get to have that day? I know that's something very important for me. And here's a little analogy that I also like to use. Now, you probably haven't flown lately. I've flown 3 times while we've had the pandemic. Very, very bizarre. But my job takes me places. And anyway, when you're on an airplane, the flight attendants go through an emergency little talk at the beginning, right? And they talk about how to put a seatbelt on, which is mind-boggling that somebody in this day and age has no idea how to put a seatbelt on, but they tell you that. And they also mention what happens in case of an emergency, what falls from the ceiling. Oxygen masks. Now here's a question. Whose mask do you put on first? And oh my gosh, when I'm in a live setting, it's a very responsive answer, and it's usually, there's 2 camps. 2 camps. Can you imagine what the camps are? One group of people say, oh, you put your child's on first, or, then you put yours on. No, it's very, very important to get this right. You put your mask on first. Okay? You don't need to be altruistic in an emergency. The most important thing you can do is A, make sure you're taken care of so you don't become part of the problem. And you can only take care of those around you if you first have taken care of yourself. You can only be strong for your family if you've been able to be strong personally. If people are going to rely on you, the last thing you should do is exhaust yourself, whether it's physically as a caretaker or financially as a provider. You're of no use to anybody if you've exhausted either of those. In fact, now you become part of the problem, and somebody has to begin taking care of you, using their precious resources, when if you would have put things in a little bit different order, you would still be self-sufficient, self-reliant, and independent. Really wonderful analogy. And so I say that the modern reverse mortgage really is nothing more than the oxygen mask in retirement. And here's something that's interesting. We had an unbelievable individual as the head of the Department of Housing and Urban Development, Dr. Ben Carson. And for the first time in our program's history, the Department of Housing and Urban Development actually went on record talking about its commitment to the modern reverse mortgage, that it is a top priority for them. What a vote of confidence, especially in times like this, when there is so much uncertainty out there. People say to me, Ted, well, what happens if the government changes their mind and stops offering the reverse mortgage? If that should ever happen, it would have no impact on those who actually have the reverse mortgage. It may make a change for those looking to get one in the future. But you do not have to worry. Once you're in the reverse mortgage, that is a bona fide contract, and it is 100% insured by the federal government, and you should have absolutely nothing to worry about. Worry is an important segue into this next part of our talk, safe. Why do people consider the reverse mortgage safe? Well, I mentioned before, there is no other company like Mutual of Omaha. We are a very unique company, and there is no other company like us in the reverse mortgage industry. It's very important who you do business with. Have you heard of them before? Do you think they're going to be around in the next few years? What type of commitment to quality and care and integrity do they have? Sterling reputation with Mutual of Omaha. I'm only going to give you one website as a reference in today's presentation, and it's very important that you write this down. So please write down www.hud.gov, not HUD.com, please, no, not HUD.info or any of the other trick web addresses out there. It's really simple, www.hud, which is HUD.gov, G-O-V. If it says .gov, you know that it is a true government website. And what happens when you put that into your web browser? You go to this web page. It says HUD.gov. And in the search box, type in reverse mortgage, okay? And it'll take you to this link. And this is the beginning of the HUD explanation of the home equity conversion mortgage for seniors, the modern reverse mortgage. I have a great website. Mutual of Omaha has a great website, but the only website that you truly need to reference is the website for the entity that created the program, the entity that administers and insures the program, the entity that is responsible for the counseling required for this program. How many of you remember Robin Leach and that TV show, Lifestyles of the Rich and Famous? No, you're not going to see any palm trees or Ferraris or champagne glasses or fancy golf courses. Good, easy to read, easy to follow information. And fact check me, please. If you find something on the website that you think that I should make a stronger point of, please share that with me. I would really appreciate it. But it's also interesting to think about where we hear pros and cons about reverse mortgages. And I will tell you, we hear a lot from people who really don't know anything about the reverse mortgage. I'm constantly amazed at talking heads on the radio or TV who purport themselves to be experts, sometimes in all things, which is impossible, but speaking on subjects as if they really know what they're talking about and giving absolute incorrect information to millions of people. And then we have folks that maybe have an axe to grind or are disappointed or unhappy. And I can't tell you how sad it is at times to come across children of seniors who seem to be more interested in what they're going to be getting as far as an inheritance instead of how can mom or dad live safely and more comfortably in their own home. It's really sad. But let's figure out who might be the best person to talk to about a reverse mortgage. How about somebody who's actually used a reverse mortgage? Don't you think that would make sense? That the best place to find out how reverse mortgages actually work would be to talk to somebody who's actually used one? Makes perfect sense to me. And it made perfect sense to AARP. And they did a survey a few years ago of thousands of people who've actually used the modern reverse mortgage. And this is what they found. 93% of the people who've used the reverse mortgage says that it has had a positive effect on their lives. Now, if you know anything about satisfaction rating, that is astronomical, astronomical. Almost as many people, 89%, said that they were so satisfied that they would recommend it to somebody else. Let me ask you, does that sound like it's a program that has problems? Does it sound like that's a program that's bad for seniors? Not according to the people who've actually used it. These are overwhelming approval numbers. But here's what's important to me. I have never had a financial tool until I moved to the reverse mortgage industry that provided anything like this. 94% of the respondents said that it gave them greater peace of mind. Now, I had financial tools that helped increase your income or increased your net worth or lowered your taxes, but nothing ever came close to this level of satisfaction. 94% of the people who've used the reverse mortgage said it provided greater peace of mind to them. That is marvelous. How important is that? Well, let's do another little drill, shall we? Close your eyes for a moment. Yes, go ahead and close them. No, I can't see, but close your eyes for a moment and imagine this. Imagine that you do not have to make your monthly mortgage payment next month. Whew, wouldn't that be nice? And then imagine, if you would, that you don't have to make the following month's mortgage payment, or the month after that, or the month after that. What would it be like to know that you do not have to make or worry about making that monthly mortgage payment again for as long as you live in your home? Would that have an impact on your quality of life? You can go ahead and open your eyes now. For the vast majority of people, having a burden like that lifted is overwhelming. The vast majority of us, the largest bill that we pay every month is our mortgage payment. Could you imagine what life would feel like not having to worry about that expense every month? Would you have more room financially to take care of some things that you'd like to take care of, things that you just want to take care of? It's amazing. 90% of the people, 89% said that it helped them live a more comfortable life. 87% said it improved their quality of life. 79% said that it helped them remain at home. Powerful, powerful results from the people who've actually used the program, the people who know the best about what impact the reverse mortgage has. Very compelling. If you don't know somebody who's done a reverse mortgage, ask. Many people aren't very bold with sharing the fact that they have a reverse mortgage, but I think you'll find that the vast majority of people that you talk to who've used one are more than satisfied. So why do we say it's the safest mortgage in America? Well, it's not created by the banks. It's created by our government, the Department of Housing and Urban Development. It is 100% FHA insured, and we're going to get into some of the components of this in just a little bit. It's conservative with what HUD allows you to have access to. If it was a bank program, they could care less about being conservative. They want to sell you the biggest mortgage possible. HUD doesn't follow that thinking. They want to make sure that you are prudent, that this doesn't strip out all of the equity in your home, because gosh darn it, you may end up selling your house and moving in the next 2 or 3 years. This program wasn't designed to liquidate all of your equity. No monthly mortgage payment. Just imagine for a moment, what do you think the number one risk with a conventional mortgage is? Oh, you're quite right. What happens if you stop making a mortgage payment with a regular mortgage? Yeah, the bank will come and foreclose on you. They will take your home. Think about the safety factor of not having to make that monthly mortgage payment. You don't have a mortgage payment to worry about missing. You can't fall behind on your mortgage payments. Incredible safety difference. And at the end, the house goes to the heirs. All the reverse mortgage does is allow you safe access to something that you already have, the investment in your own home, without having to make or worry about making monthly mortgage payments. And it's a mortgage. All this program does is simply defer the need to make those payments until you're done using the house. Okay, brilliant way to utilize your assets. So let's get into some basics, shall we? Well, I just mentioned this, that it's a mortgage, okay? It's not a handout. The government isn't giving you anything, like I said, nothing that's not already yours. You retain title to your property, full rights of home ownership, meaning you can sell the house at any point, you can pay off the loan at any point, there's never a prepayment penalty, the house goes to your heirs, and full responsibilities, meaning just like with any other home, you still have to pay your property taxes, you own your own home. You still have to pay homeowners insurance, and if you're at a homeowners association, you have to pay those payments. You are the homeowner. You have those rights and those responsibilities. And just like with any mortgage, there's closing costs, just like any other mortgage. And we, the bank, are going to charge you interest for the use of our money, just like they do on a conventional mortgage. How do you qualify? Well, one of you has to be at least 62. Now, if you're married, I don't know whether this is a good thing or a bad thing, but your spouse has to be at least 18. And when I do my seminars, you should see the looks that some of these couples give each other with that information. But at least one of you has to be at least 62 years of age to participate. We can only do this on your primary residence, okay? You can have as many houses as you want. I did a reverse mortgage for a gentleman that owned 14 homes. Now, 4 of them were homes that he actually lived in, but 10 were rentals. Not a problem, but only 1 of them was considered his primary residence. It's what your driver's license says is your primary residence. Your taxes say it's your primary residence. Your credit tells you, your utilities. It's very easy for us to figure out whether it's your primary residence or not. And here's something interesting. When I first got into looking at the reverse mortgage, I thought you had to have your home free and clear. No, you can have a mortgage on your home. It can be paid for or not. Now, 18 years ago, the majority of people that I was working with had their homes paid for. That was another generation. Today's generation, my generation, boomers, most of us are getting to retirement with a mortgage intact. In fact, the majority of loans that we do we find that people still have a mortgage of some sort on their home. The kinds of properties that we can do the reverse mortgage with, well, most common is a single family residence, just a regular house. We can do this on condos. Now, the condominium complex needs to be FHA approved. And if it's not FHA approved, if they meet certain qualifications, we can do what's called a spot condo or an individual condo approval. We can do this on a duplex, a triplex, or a fourplex. The multiplex idea is very popular with our financial planners. Think about this. You have a big house, you sell it, you use the reverse for purchase, yes, because you can buy a house with a reverse mortgage to buy, let's say, a fourplex. You live in one of the units and you rent out the other 3 units for income. You have no debt service and you get the income from those 3 units. Anyway, that's something I'm thinking about doing personally, as a matter of fact. And you can use the reverse mortgage on a manufactured home. As long as the manufactured home was built after June 1976, you own the land that it sits on and that the home has been permanently affixed to the ground. But quite an array of properties that we can use this on. And with the FHA reverse mortgage, well, people do all sorts of things with it. One of the most common is simply to eliminate your current monthly mortgage payment. My goodness, think about how much better your budget would look without having to make that mortgage payment every month. Or people are looking for income. You can turn that mortgage around and have the reverse mortgage give you a payment every month for life, as long as you live in the home. Spot quiz, until what age? Do you remember that number I asked you to write down? Yeah, it's 150. Yeah, no matter what happens to the value of your home or your mortgage balance, that's guaranteed. You can take cash out in a lump sum. We have people using this to pay off medical bills, to help out loved ones. We have people that buy investment homes or second homes. People do all sorts of things with the money. Or they don't take anything out of their reverse mortgage. They set it up and let it just sit quietly in the background, because part of a reverse mortgage is something called the HECM, or home equity line of credit, similar to a HELOC or a home equity line of credit that you might get from the credit union. But HUD actually assigns a rate of growth to the funds left inside the reverse mortgage line of credit. We have folks that use this. I have financial planners that will give me, let's say, a couple that are age 62, still working, paid off home, excuse me, and no, not COVID, sorry, just a little tickle. And they are going to be working for the next 10 years, but they're worried about where home values are going to be going. So they put the reverse mortgage in place today. That line of credit is going to be growing in value for them. And in 10 years, it'll probably have doubled in value. And so now they have a line of credit that's probably worth more than their home was worth than when they started. A great way to ensure your equity. People use it for asset account preservation, something called sequence of returns risk. If you have investment accounts, the worst time to take money out of those accounts is when they're under financial pressure, when they're going down. You want to leave as many stocks in those investment accounts as possible, because when the market comes back, if you've liquidated those stocks, there's nothing to come back with. Instead, you can transfer the source of your income to your housing wealth for a few months until the market recovers, and then you stop taking money out of your reverse mortgage and start taking money out of your investment accounts again. It's a great way to manage your assets. We have some folks that use this, again, not for today, but for tomorrow. For couples, I think it's a very important conversation for the two of you to have, realizing that very doubtful that you're both going to be leaving at the same time. One spouse is going to predecease the other. Now, we used to think that it was going to be us guys that were going to pass away before you gals, but that's not necessarily the case. And it used to be conventionally that us guys were the primary breadwinner and you gals, maybe stayed home with the kids. And so if he passes away, there could be a dramatic impact to the cash flow every month with his income gone. Well, today it could be just as likely that she made the majority of the money in the house. But the point is that when one of you passes, there is going to be an impact to the household income and very little impact to the household expenses. When a spouse passes, the property taxes are going to remain the same. Utilities are going to remain the same. Depending on how well you fed each other, we're talking a bag of groceries or two a month. The cost difference is minimal. But if your income goes away with the passing of that spouse, many people are forced to make decisions under financial duress. It's nice to know that with the reverse mortgage, that no matter which one of you is left behind, you're not going to be placing your spouse in a situation where they're forced to make a rash decision about where they go and what they do. Goodness knows they're going to be grieving and dealing with all sorts of other stuff upon your passing. The last thing you want to do is force them into a situation where they also have to sell the house and move. Now, whether they want to stay there eventually or not isn't as important. This program is going to give them the financial protection that they can decide what they want to do and when they want to do it. We have a lot of people who use it for that. And then the converse, we're seeing a marked increase in divorces in the senior population. And what happens with how you assign the assets and who gets what? Well, many times it's a house that you've lived in for a while, and then you decide one of you gets to keep the house, but the other one needs to be cashed out of it. Well, the reverse mortgage is a very viable financial tool to help with that. And then the fastest growing use of the modern reverse mortgage is to purchase a new home. That's right. In 2009, HUD realized that this is nothing more than a mortgage. Not only can it help keep you in your existing home, but should not be any reason why you can't use it to buy a house. Literally the fastest growing use of the reverse mortgage today. It's simply a mortgage, okay? It's not a handout. Whatever you borrow, you will pay back. The bank is going to get paid by charging you interest, just like they do today. Today, if you have a regular loan, you're giving the bank a payment that consists of a little bit of principal and a whole lot of interest, okay? And that's how the banks get paid. Our program, interest only, and the bank does not collect anything until you're done using the house. unless you want to make payments, and you can make payments if you want. Same setup fees, same structure. You have to get an appraisal, title insurance, credit report, flood cert, et cetera, et cetera. All we do, again, is defer the interest until you're done using the house. Oh, but there's so much more. And one of the best ways I can help illustrate how versatile this program is I'm going to tell you stories of two different borrowers. The house you see on the left is owned by a dear, sweet gal, and we'll call her Susie. Okay, Susie came to our office one day in tears because it wasn't the passing of a spouse, but it was just as traumatic. Her dear, sweet sister had developed Alzheimer's and had been forced out of the house to a care facility. And when she left, so did Susie's sister's Social Security. How's that for a tongue twister? And on her own, she did not have enough income to handle all of her bills. And she had just lost her sister, and now she was terrified that she was going to lose the house the two of them had bought together some 40 years ago. The reverse mortgage is allowing this sweet gal the opportunity, to relieve herself of her current monthly mortgage payment. That concern is gone. She also wanted an extra $200 a month just for extra spending money, because now she had to take the time to go visit her sister every day in the care facility. And it was just her and her little dog at home. And then she took some cash out of close because there were some improvements that she wanted to make to the house. And then she left the rest in that HECM line of credit. She used all aspects of the reverse mortgage, and it's worked out beautifully for her. Now, the house on the right, let's just say that that's owned by the McWealthies. Okay, that's $1 million plus home just outside of Seattle. They have another $1 million plus home in Southern California. They just go back and forth between their homes as the weather dictates for them, and they don't work. Their money works for them. They are investors. They have taken their money and they have been stewards of investment, and they have found ways to grow their money, and it's been very successful for them. But they've also realized that there are times when they don't want to take money out of their investment accounts because those investment accounts are on downward pressure, but they need income. They need money to live. So they use the reverse mortgage. In those times when their accounts are under pressure, they take money out of their housing wealth, usually from their reverse mortgage line of credit, until things settle down in the market. When the market starts picking back up, they stop taking money out of their reverse mortgage and start taking money out of their investment accounts. It's a beautiful way. It's called sequence of returns risks, and it's very powerful. Two different people from opposite ends of the spectrum using the exact same program, the FHA home equity conversion mortgage. Now, most of the folks that we work with find themselves somewhere in between those two. But I've been doing this for 18 years. I have helped thousands of people with the reverse mortgage, and I have never done the same loan twice. Everybody has their unique set of circumstances and goals and wants. Now, we talked about smart, the reverse mortgage being smart. Why do we need to be smart in retirement? Well, let's take a moment and write down some of those challenges that are facing us in retirement and some of those things that we need to be smart about. You know, there's some pitfalls out there. There's some challenges. What could those look like? Well, while you're writing, I'll just pop this up there. There are a lot of them. Look at this. Number one on the list, longevity. Here's something that's so staggering. No financial plan that started 30 or 40 years ago ever anticipated that we would be living as long as we're living today. Oh my goodness, we're adding an extra 10 years to retirement plans, 10 years of additional income. And that could be an extra $200,000 or $300,000 or $500,000 needed in retirement. It's expensive. It really is. We've been fortunate with inflation, but I will tell you, with what we've gone through and what we're going to be going through for the next few months because of COVID-19, get ready for inflation. And many people have a budget, but it's very difficult to stick to that budget. Excessive withdrawal risk. Many times I work with financial planners who say, yeah, Ted, no, we had it all planned out, but Mrs. Smith, 1 month she needed some extra money for this, and then a few months later she wanted some extra money for that, and all of a sudden our plan just imploded. What can you do to help? Well, we can be of help. But these are just some of the risks that people are seeing in retirement. With the reverse mortgage, the HECM, home equity conversion mortgage, it can be a buffer against some of those challenges. It can be a replacement for some of those sources of income. And if you have assets or incomes, it can be an accelerator to improve overall net worth. And this is a chart that we use when we work with some of our folks. We have all sorts of tools that help show you graphically what the reverse mortgage does. There are piles of numbers that we can show you, but sometimes the graphs and pictures do an even better job. You're going to notice on this chart that there are 2 sets of bars, okay? This dark green set is this person's traditional plan, okay? This is what they set up with the financial planner. And in financial planning, we try and solve for something called guaranteed income in retirement. We want to have you create enough assets while you're working that when you stop working, the money that you've created starts working for you and starts paying your bills for you. Sometimes it works and sometimes it doesn't work, but this was a traditional plan, okay? The golden bars, and yes, I made the bars gold for a reason, because this is, if we inserted the use of a reverse mortgage, the first thing you're going to notice is that we can dramatically extend guaranteed income in retirement. But even as important, do you notice how these gold bars have actually gone up over this period of time? By using housing wealth to offset withdrawals from your asset accounts, those asset accounts are going to stay larger longer. The longer you keep them larger, the greater growth you're going to have on them. Your home, your housing wealth is not going to be impacted by what you carve out of it with your reverse mortgage. Let's say you have a $500,000 home value. If it grows at 10% home appreciation, that'll be a $50,000 growth on the $500,000. Even if you took out $100,000 of the home value, you're still going to get a $50,000 growth on that asset. Different than with your investment account. Your investment account is on a cost basis. If you took $50,000 out of your investment account, it drops by $50,000. So if it has a 10% increase, it's going to be an increase on a lower amount. And if you take more out, the growth is going to be less and less. It's a huge understanding of where you take money from and the impact that it has on your overall net worth. Anyway, just some of the details that we can get into as we help you look at and map out the use of the reverse mortgage. How does it work? Well, it basically allows you to be in control of your mortgage. It's very powerful. Different than a regular mortgage, you don't have to make mortgage payments. You retain title to your house with full rights and responsibilities of home ownership, and you're responsible for property taxes, homeowners insurance, HOA payments. It's non-recourse, meaning no matter what happens to home values in the future, no matter how bad the housing crisis gets with the next recession that we're going to go through, you are protected inside the reverse mortgage. Your home value can go to zero. Your loan is never going to be called due. Your line of credit is never going to be frozen or reduced or called. If you're getting a monthly payment, it's guaranteed to continue to come to you. If you have money in your line of credit, you'll be able to access it no matter what happens to your home value. And if you should pass away and your home value is less than what you owe on your home, if you're upside down or underwater on your reverse mortgage, you have a special mortgage insurance component that covers that shortfall for you and covers that shortfall for your heirs. Yes, there's no equity left in your home. The market has crashed, taking away your equity. But unlike a conventional mortgage, you are not responsible for that shortfall, nor are your heirs. You cannot pass a bill onto your heirs if you are upside down at the end. I can't tell you how many folks ask me, Ted, I don't want to do anything that's going to jeopardize my children. I don't want to do anything that's going to cost them money at the end. This program is insured not to do that. Really important. And while we do not qualify you based on your ability to make a monthly mortgage payment, we are going to pay attention to your ability, your willingness and capacity to handle your property costs, because HUD has realized that not everybody's destined to be a homeowner. Not everybody has the wherewithal to be a homeowner. And we do not want to perpetuate homeownership in situations where people just don't have the financial resources to handle the basics such as property taxes or homeowners insurance. So we go through a little bit of a financial litmus test. I just explained how the FHA non-recourse aspect of the mortgage insurance works. And as far as cost goes, like I said, we are the same cost as a regular FHA mortgage. The only difference between FHA mortgages and non-FHA mortgages is that all FHA mortgages have that mortgage insurance component, and it's something that you pay for. We will cover the cost through the loan, but you will cover the cost when you're done using the reverse mortgage. And we have one cost not found on the conventional FHA mortgage, and this is for the HUD counseling. No one can do a reverse mortgage, a modern reverse mortgage, without first having completed a counseling appointment with a HUD-trained counselor. Now, that is typically done over the telephone. It usually takes about an hour. They're going to confirm the printed information that we, the lender, will have sent you in the meanwhile. And they're going to make sure you know what your options are. They're going to make sure that you understand what it takes to get into the program, what your responsibilities are while you're in the program, what happens at the end. And you get a little diploma when you're done. It's called a certificate of completion of HUD counseling. Doing the counseling in no way commits you to move forward with the reverse mortgage, but you cannot complete a reverse mortgage without having this counseling. I will tell you this, it is an extra hoop to jump through, but it is a hoop that we are so happy is there because we know that you know that we know that you know. Plain and simple. You're going to have an independent third-party entity confirm for you the cost of the reverse mortgage, the interest rates. They're going to make sure you understand the ins and outs of it. We wish that regular mortgages had this requirement as well. The vast majority of people don't know how their mortgage works. You will know far more about your reverse mortgage than your kids know about their conventional mortgage, I will guarantee you. And speaking about kids, your kids can be part of the HUD counseling appointment as well. They can conference in whoever you would like, and we highly encourage it. It's a great way to get questions answered and to hear it from somebody other than your lender. Why do we say that you have control with your reverse mortgage? Well, we have some folks that continue to make a payment on their reverse mortgage. I'm working with an advisor right now who said, hey, Ted, this client wants to refinance their existing reverse mortgage or refinance their mortgage. But I think, maybe a reverse mortgage might be a great option. And I said, gosh, Dan, you know what? Why? And he talked about the fact that they had good income and they wanted to make payments. And I said, well, how about this? How about we refinance into a reverse mortgage and they can continue to make a monthly mortgage payment? And he said, really? And I said, yes, because our payment will do two things. Not only will it go to lower their balance every month, but every dollar that they put into their reverse mortgage today, they can take back out at any point in the future. Think about that. If you're making payments on your mortgage today, can you call your mortgage company and say, hey, I've given you $18,000 over this last year. Can I get $10,000 of that out next week, please? I'd like to go on a vacation. Your bank would say, no, sorry. But if you have a reverse mortgage, like I said, every payment you make on a reverse mortgage does two things. It lowers your outstanding balance, dollar for dollar, and it shows up as a dollar for dollar increase in that available reverse mortgage line of credit. Oh, and by the way, money that sits inside the reverse mortgage line of credit has a HUD-assigned rate of growth. That money is growing in value, regardless of what happens to the home value. Home values can stay flat or go down, the line of credit has a growth value that's guaranteed to continue. So I'm pretty sure these folks are going to refinance, but into a HECM, and they are going to continue to make a monthly mortgage payment. It's going to work out great. You can decide how much you want that payment to be. You can pay the interest-only amount. You can pay interest and a little bit more. You can pay less than interest. You don't have to make any payment. Most people who use the reverse mortgage, though, never make or worry about making another monthly mortgage payment for as long as they live. But everybody's different. Now, what happens at the end? Well, there's two main options. If you pass away in your reverse mortgage and your heirs want to keep the house, all they have to do is pay off your loan balance. And they can pay that off any way they want. They can pay it off with their own mortgage. They can pay it off with, let's say you planned well and you died with a life insurance policy and they get a big tax-free death benefit check when you pass away. They can use that money to pay off the loan. They can pay it off however they want if they want to keep the house. But I will tell you, 9 times out of 10, they really want the money. So they're going to sell the house. They'll pay off the reverse mortgage balance, and then they keep the remaining equity. It's amazing. And this is how HUD looks at the end, different than a regular loan. A regular loan, they could care less if you pass away. Happens every day. Yep, 3 months, they'll start foreclosing on your kids. HUD, though, realizes that for the majority of people using this program, they're using it in the last chapter of their lives. There's a large percentage of people that are going to pass away with a reverse mortgage on their home. HUD is going to give your heirs 6 to 12 months to handle things at the end. Why would this be important? Well, number one, your heirs may be going through a grieving process. It can be very disruptive to a family to have a loved one pass away. And heaven forbid somebody passes away during the holidays. I mean, between Thanksgiving and New Year's, what a horrible time to try and deal with an estate issue and try and get a house ready for sale. And usually the best time to sell a house is, summertime. So they can wait and get everything taken care of that they need to take full advantage of that 6 to 12 months. It's non-recourse. If the market should have crashed and your house is now worth less than they owe, they're not responsible for the shortfall. But here's a real surprise. If they do want to buy the house or keep the house at that point, but let's say you owe $300,000 on your reverse mortgage, but your house is now worth only $250,000, an heir within arm's reach can purchase the home, not for what you owe, not for the new appraised value, but 5% less than the new low appraised value, even though it's upside down at the end. And now somebody says, well, Ted, why would somebody want to buy a house in a down market like that? Oh, who wouldn't want to buy a house in a down market? When is the best time to buy real estate? When prices are down. You may have a smart and savvy child who might say, gosh, mom or dad, the market's crashed, but I think I'd really like to buy that house now while it's at a discount. HUD has taken that provision into account. And this is what that mortgage insurance looks like. This is from HUD to you in your application and again in your final loan documents. It says, read this, that you are notified that you have no personal liability for payment of this debt. There is no other mortgage contract that says this. That is in black and white from the Department of Housing and Urban Development, explaining how that insurance works. So let's take a closer look, okay? Let's start looking at some numbers. Most people at this point are saying, okay, Ted, that all sounds great, but how much can I get? Yeah, so each of you is going to have your own unique number. Each of you are going to get a different amount from your homes for a few reasons. We call it a principal limit, what you actually qualify for. And it's not based on your income. It's not based on your credit score. It's not based on your debt to income ratio, the way a conventional mortgage is. Again, we're not trying to sell you the biggest mortgage based on how much we think you can afford to spend on a monthly basis. That's what they do on the conventional side. They just want to sell you the biggest loan possible. And somehow they make it seem like it's a great idea to get the biggest loan you possibly can qualify for. I mean, they've done such a great job marketing. HUD doesn't work like that. It's based on longevity, okay? They want you to be safe and prudent. So they have a calculation, they have an algorithm where they're going to use the age of the youngest title holder. They're going to use the value of the property, and a third factor, something that they call the expected interest rate. Those three things go into a calculation to determine what we call the principal limit, all right? The older you are, the more you're going to qualify for. The higher value of your home, the more you're going to qualify for. And in most instances, the lower the interest rate, the more you're going to qualify for. So it's a three-factor algorithm that determines what you qualify for, okay? But we have something called a maximum claim amount, and that is either going to be the appraised value, or all FHA loans have a lending limit, some ceiling of value that they look at. And for most of us, you know, we're never gonna see a house of that amount. But for a lot of us, we are. And that amount is $765,600. Now, you may want to write this down depending on where you live. If you're here in the greater Seattle area, well, once upon a time, $765,600 would buy you a beautiful house on the lake. Today, in many areas, that's kind of like a starter home. Really, it's amazing. And for my folks in California, they wish they could find a house for $765,600. Yeah, it really depends on where you are, but HUD has a limit of $765,600 in the calculation that they use for the reverse mortgage. Now, like I said, the majority of people who use this program, your home is probably going to appraise for less than $765,000. Depending on where you are, a $350,000 home is an expensive home. You know, I did a reverse mortgage for somebody in Minnesota. $150,000 is an expensive home in parts of Minnesota. Yep. Other parts of the country, you know, it's all about location, location, location. If your home is worth more than $765,000, you can still do the reverse mortgage. We will only use that number, that factor in the calculation. If you have $1 million home, we're only going to be able to calculate it at the $765,600 level. But not to fear, we have another version of the reverse mortgage called the jumbo reverse mortgage, designed specifically for those higher valued homes. But we're going to focus on the FHA reverse mortgage right now. How much you qualify for is determined by HUD, not determined by us, determined by HUD. It doesn't matter what company you go to, it's the same calculation. We all use the same HUD calculator. And if you go off to HUD counseling, the great thing is you're going to give them the same numbers that you gave us: ages of the title holders, the home value, your mortgage balance. They're going to plug it into a calculator that's going to spit out the same numbers that we are going to create for you when we give you printed information. There is no other mortgage out there that a counselor can run in their location. We can run in ours, and it's going to mesh. It's because, again, this isn't a bank-created program. This is created by the Department of Housing and Urban Development. Gosh, what does this look like? Well, this is another graph that I use when I work with folks. And this was somebody age 62. They had a $600,000 home. The red line is the mortgage balance. Yep, they'll have a bit of a mortgage over time. The blue line is the home value, and then the green line is they left all of their money in the line of credit. And it's beautiful. Now, here's something really important. Let's say 2 or 3 years into this, the housing market starts heading south and it starts going down. And at some point, it drops below what they have available in their line of credit. Nothing happens to their line of credit. It doesn't get frozen. It doesn't get reduced. It doesn't get called. The home value can drop to zero. Nothing is going to happen to your available funds. They're going to continue to grow in value, and you're going to continue to have access to them. Very important. This just came out in the last 2 weeks. Both Chase and Wells Fargo have eliminated all of their home equity line of credit products. Let me repeat that. Two of the largest banks in America, Wells Fargo and Chase, in this last month have eliminated all home equity lines of credit. When did we see this happen before? 2007, 2008. As the housing crisis started to crumble, banks get very scared. They do not like risk. HELOCs are secondary loans and are at greater risk than first mortgages. So we saw this happen before, and we're starting to see it happen now. First of all, banks stop offering home equity lines of credit. Many folks consider a reverse mortgage or a home equity line of credit. I will tell you, home equity line of credits are wrought with risk. Okay, number one, we're seeing the two largest lenders stop offering them. What happens next is for those folks that do have home equity lines of credit, they're going to be frozen, meaning you can't take any more money out. The other thing that's going to happen is they're going to reduce the amount that you have available in your home equity line of credit. And then you're going to see what happened to millions of homeowners in 2008. And the banks called those HELOCs due with impunity. They can do it at any point. It's in your contract. They can call your loan due anytime they want, and they will, and they did. And millions of people felt the bite of that type of risk. That cannot happen with the reverse mortgage line of credit. It can never be frozen, it can never be reduced, and it can never be called. It's a beautiful, beautiful, powerful part of how the reverse mortgage works. And I will tell you quite honestly, 18 years ago, when I first made the transition from being a financial advisor to the reverse mortgage industry, it was this primary point, how the reverse mortgage line of credit worked, its function, its guarantee, its liquidity, its insured. It was like I had no other tool that came close to the power of this line of credit. And when you see it in the reference of your own personal situation, it will have a much bigger impact. So you have available to the funds that you qualify for from the reverse mortgage a number of different ways. You can take cash out. You can get a payment for life until you turn age 150, as long as you're living in the home. You can get a term payment. So let's say more money for a shorter period of time. You can use the HECM line of credit or any combination of those options. You can use a little bit of each one of them. And once you set up your payment plan, if in a year or two you decide you want something else, you can make a change. You can change your payment plan, how the reverse mortgage pays you anytime you want. Very powerful, very flexible, puts you in complete control. The reverse mortgage line of credit is not found money, okay? An important distinction. We are not taking money out of your home and investing it someplace. If you've noticed, I've never said that the line of credit grows at a rate of interest. It has a rate of growth assigned by the Department of Housing and Urban Development, but it's not interest. We haven't taken money out of your house and invested it someplace. What HUD has done in their ingenious way is they have decided to create a way to expand your borrowing capacity over time without you having to refinance. Meaning, no matter what you do with your reverse mortgage, that line of credit is going to continue to grow in value for you. And once it starts, doesn't matter what happens to your home value. Your home value can be flat or go down. That line of credit is going to be guaranteed to continue to grow for you. Right now, it's growing at about 5 to 5.5% tax-free. Show me someplace else that you can park money that's going to give you that type of rate of growth, tax-free, 100% FHA insured. When the money comes out, it's not considered income. You can put money into the line of credit. You can take it out. You can put it in. You can take it out. I have business owners use the reverse mortgage line of credit as an extra line of credit for their business. It's very, very powerful, and no restriction on the use of funds. But Ted, you say, what happens if I live in a house like this? Well, then you must live in California, because that's where I got that photograph from. Or maybe you live in a house like this. This is Tiburon, one of my favorite places. And these people who live right there, somebody I did a reverse mortgage for a few years ago. On another segment, I'll tell you about them. But these people still use the reverse mortgage, but because their homes are worth so much more, then that $756,600 maximum claim amount, they use the jumbo reverse mortgage, where you can borrow up to $4 million, and you can use it for all sorts of things. Refinance, purchase, condo. Let's just go back here for a second. It's interesting. The highest home value used for a reverse mortgage to date is $40 million, an estate in Florida. And you may say, Ted, why in the world would somebody who has a $40 million house need to do a reverse mortgage? Well, again, sometimes it's a need, sometimes it's a want, but everybody has a different situation, okay? Now, this situation was, this individual had inherited that estate from his father. And well, let me just ask you, do you have any idea what property taxes are on a $40 million property? Yeah, exactly. So he did not have that type of cash flow. So he used a reverse mortgage to take some of the value out of the house in order to pay taxes and upkeep going forward. He didn't want to sell the property. He wanted to live there. And the reverse mortgage allowed him to do so. Brilliant use of the reverse mortgage. Why do we say the reverse mortgage is sensible? Well, it's sensible if you want to stay where you are, but what about if you don't want to stay where you are? Many of you should take a look around you right now and have a very serious conversation with yourself or your loved one. You know, is this your forever home? Is this really a good house for you to continue to age in? Now, if you live in a typical house here in the Northwest, it's called a split level rambler, and it is not designed for seniors because you have to go upstairs to go in the front door, then to go upstairs or downstairs to go to the different living areas. I do lots of reverse mortgages, interestingly, on split level ramblers. Was great maybe when you're in your 30s and 40s or 20s, but now that we're in our 60s and 70s and 80s, those stairs come at a cost. And once upon a time, it was great to have a great big yard for the kids to run around in. But, you know, the kids aren't around anymore. And now it's a real hassle to keep that yard trimmed and the bushes cut and the gardening. And yes, it's fun to garden, but oh my gosh, you really need that big of a garden. And maybe, just maybe, it's time for you to live the way you want to live. Maybe there's a location, part of the state, a part of the country where you've really wanted to spend your twilight years in. Allow yourself the permission to live comfortably, safely, securely, and happily. Maybe you want to move closer to your kids or grandkids. I have somebody literally who wants to move further away from their family. That can be really, really an interesting conversation. But take a look at your situation. Are you well suited where you are, or could a new home be really something that would be meaningful for you? You don't have to stay where you are right now. That's right. Have that conversation. Take a look around. 2009, HUD approved the use of the modern reverse mortgage for purchase. It's just like a regular mortgage. You put a certain amount down based on your age, okay, not your income or credit score. The older you are, the less down payment you're going to have to make. Let's just say at age 72, you're going to be putting about 50% down. That means literally that you're going to double your home buying dollar. You're not going to have any monthly mortgage payment, okay? And you get to keep more cash and double your home buying dollars. And it's really that simple. It's a mortgage. We will finance the purchase. You'll put a certain percentage down. But at age 72, let's say you sell your house now and you walk away with $300,000. Let's say you have a mortgage on your house and, oh my gosh, after you get done selling it and everything you've had to do, you have $300,000. You certainly don't want a mortgage at this point if you can help it, but where are you going to buy for $300,000 around here? Well, you can buy some places, but it may not be where you really want to live. But let's just say we could tell you that you could turn that $300,000 into a $600,000 purchase. Now your options really open up and you can buy something nicer and newer and closer in. You really have options when you consider the HECM for purchase. It's very powerful. And we can send you a booklet that will have a matrix similar to the one that you see on your screen, where it shows you a simple grid based on your age, what a down payment amount would be. And like I said earlier, this is the fastest growing use of the modern reverse mortgage. And it's really powerful. This is a real life example right now. This couple age 75, they wanted to move closer to their kids and their grandkids. They bought a house right across the street from their daughter and her husband and their grandkids. And they didn't think that they were going to be able to do it. But they walked away with about $350,000 from the sale of their home. They bought this $600,000 house, $599,000 for $287,000 down. Isn't that marvelous? Right across the street from their kids. Now they're going to have a bigger mortgage balance. Their home value is growing. You know, not much in the line of credit. You can overfund your purchase if you want to create the line of credit. But you notice this gap? This is the equity. The equity is simply the difference between your home value and what you owe. Okay? Home value and what you owe. Where are we? Home value and what you owe. That's the difference between, that's what equity is, the difference between your home value and what you owe. And it's a little bit difficult, but you can see even though the home value is growing, or even though the mortgage balance is growing, the home value is growing, and they're actually going to have more equity in their house 10 years from now than the day they started, as long as things continue as they are. And yes, you can use the jumbo reverse to purchase as well. Now, this didn't actually happen. It almost happened. This person was going to buy this $6.5 million house. They had the money, but buying, I'll just say this is in Laguna Beach, and buying beachfront in Laguna Beach can be challenging sometimes. Sometimes those properties go very, very quickly. But we do a lot of work in the purchase area. Mutual of Omaha, just so you know, we are far and away the #1 reverse for purchase lender in the United States. People use this for all sorts of reasons, mainly liquidity, keeping more of their cash in their pocket. It's kind of the best of both worlds. It's kind of like paying cash. You don't have a monthly mortgage payment, except you get to keep half of that cash in your own pocket to do with as you choose. And you can use it just for cash. You can use it for travel. You can use it for upgraded appliances or furniture, or you can go out and buy a second home with the extra money, whatever you want to do with it. But we have many folks, and you might be one of them, that think that you might be stuck, that you can't make that move. Sit down with us. We'll be happy to go over what the reverse mortgage would look like. You may have more than enough equity to buy your dream home in retirement and not have a monthly mortgage payment. Very, very powerful. So guys, we're wrapping things up. Hopefully you've become comfortable now with the idea that the reverse mortgage is safe and smart and sensible and powerful and flexible and dynamic. I can't use that full title at the beginning of my presentation. It's too long, but I certainly can use it at the end. And I think you'll nod in agreement. But what's important really is your story, okay? I can tell you all sorts of examples of people who've used the program, but until you see what this program looks like through your unique lens, your unique set of circumstance, it's going to be abstract. So I'm going to encourage you to do this. Once you're done digesting this information, contact me. Let me answer some questions for you. I know you're going to have specific questions, and they're important that I get them answered for you. And then let's do this. With a little bit of basic information, I can create for you a personalized report showing you what your top reverse mortgage options are going to look like. You qualify for all of them, okay? You qualify for every version of the reverse mortgage. In fact, you qualify for all of the interest rates from the reverse mortgage. I will show you what you qualify for. I'll show you the lowest, the middle, the highest. Each one has its own advantage. Don't be tricked. It's not always the lowest interest rate wins when it comes to the reverse mortgage. I have many people choose the highest interest rate because just so you know, they want to maximize the rate of growth on their line of credit. They're not worried about the interest on a very small balance today. They want to maximize the growth on that big number, the line of credit. So we will put it in a format so you can see what those options look like, and you will be able to determine which is the best course of action for you. So where are we today? We're at step number 1. It's called discovery. You are learning about the reverse mortgage, and we will help you in that process with that reverse mortgage comparison. Included in the comparison is the list of your HUD counselors. Your next step, if things look like it's going to be a fit, then get your counseling scheduled and completed. We'll have a follow-up conversation, make sure all of your questions are answered. But if things are thumbs up, then we'll go ahead and sign the application. The application does not commit you to anything. It commits us, it locks in the principal limit amount, and it allows us to order the appraisal. Once we get the appraisal, then we know the real numbers. Up until we get the appraised value, for the most part, it's abstract. We are estimating the value of the home, and the home value has almost everything to do with how much you qualify for title insurance costs, etc. Your loan goes through underwriting like any other loan will. We do our own underwriting, our own processing. We'll get our approval. We'll get our clear to close. You'll sign your final loan documents, and if you've asked for money out, you'll get your money. If it's a purchase, you'll get your new keys, and you won't have a monthly mortgage payment to worry about for as long as you live in your home. In closing, I want to say this. Yep, I'm a Boy Scout. You may have guessed by now, but our motto, be prepared, could not be more appropriate for the times we're living in right now. We would much rather have you with this program in place and not need to use it right now, instead of something changing and you try and get it and not be able to have access to it. These are important things to consider. Currently, home values are remaining strong only because so few homes are on the market. That is going to change. We have 20 million people out of work. There is going to be foreclosures, and as foreclosures happen, the market is going to become saturated again, and as volume expands, pricing is going to go down. It is inevitable. Right now, interest rates are close to all-time lows, but know this, these are artificially low interest rates. The government is doing everything they can to keep interest rates low, to keep the velocity of money going in the economy. We do not use the interest rates that they talk about with the Federal Reserve or Prime. That is not how the reverse mortgage is calculated. Our interest rates are based on an index called the 10-year swap rate. Now, they do tend to mirror one another, but if you see interest rates drop to 2%, don't think that that means reverse mortgage interest rates are dropping to 2%. They're different, okay? Yes, our interest rates are also at near to all-time record lows, but they're not the same. Investment accounts, it's a roller coaster right now, more like a whipsaw. One day they're up, next day they're down. We had the largest drop in stock market history earlier this month, okay? And then we had one of the largest gains. It all depends on when it's your turn to get off the merry-go-round, but your investment accounts are in free fall right now. Taxes. I hate to say the T word, but there's only one way we're going to be able to pay for the trillions and trillions of dollars that the government is spending right now. And you guessed it. We're going to pay for it with taxes. When and how much, we don't know. Nursing homes. I told you before, I'm not going to dwell on this. Please do not go to a nursing home. Find any way possible to stay out of a nursing home. Many people use the reverse mortgage to create the funds in order to provide care in the house. Please look at that as an option. Inflation, again, it's not a matter of if, but when. Please get your facts, compare your choices, put us down on the table beside your options. Look at it compared to a conventional mortgage. Look at it compared to a home equity line of credit. Look at it compared to selling your house and renting. Oh my gosh, don't even get me started on that idea. Talk about risk and peril. Sell your house and rent. You've just like done two of the worst things that you can possibly do economically. But know this, as you get your facts, a clear path will become apparent to you. Happens every time I work with somebody. We sit down to begin and they are fearful and doubtful and confused. But as we shine the clear light of truth on their situation, facts are facts. And all of a sudden, it's like, okay, I can see this stepping stone and I can see the next stepping stone and I can see the next stepping stone. It will open up for you as you get your facts. So contact us. Let me know how I can be of help. I'm happy to answer your questions, no matter how big or small. I'm going to send you an evaluation. Please give me feedback. I really appreciate it. And I just want to say this in closing. They told us at the very beginning of the pandemic, something that just stuck to me. And they were telling us they had no idea what we were dealing with. It was unknown, unseen, and we were expecting the worst. And they told us this one thing, that we, the American people, were the front line to deal with this. It was how we as individuals were going to respond that was going to make all the difference. Remember at the very beginning, they told us it was up to us. Wash our hands. Don't touch our face. Limit unnecessary contact. If you're sick, stay home. I believe in the American people. I believe that you and I and our neighbors are going to be able to deal with this. I have no idea exactly what it's going to look like, but I have every confidence we've brought ourselves through things in the past and we'll bring ourselves through this in the future. I want to thank you for your time. I want to thank you for your consideration. And thank you so much for attending today's seminar.